At 3 a.m., the dollar loses 40% of its value. By sunrise, ATMs are empty. By noon, banks shut their doors. By nightfall, money stops working. And tomorrow, nobody knows what anything is worth. This isn't fiction. This is exactly how a dollar collapse would unfold. Now imagine this isn't a headline from the future, but the morning you wake up to. You open your phone, you open the news, and the first headline you see says, "Emergency address by the President of the United States at 3 a.m. The second headline, "The US dollar has lost 40% of its value overnight." And the third, "Banks are closed until further notice." This isn't a movie plot. It's a scenario economists and financial historians say is possible. And today we're not just going to talk about it. We're going to live through it. Minute by minute, hour by hour, day by day. What actually triggers something like this? The uncomfortable truth is, the trigger doesn't matter. It could be China announcing the sale of $1 trillion in U.S. Treasury bonds. It could be Saudi Arabia selling oil in yuan instead of dollars. It could be the Federal Reserve announcing another emergency money printing program, or a major bank failing overnight, because currencies don't collapse because of math. They collapse because trust breaks, and when trust breaks, it breaks fast. Hour 03:32 a.m. Eastern Time. The news hits Bloomberg terminals. Professional traders in Asia see it first. Tokyo is still open. Within minutes, dollar-denominated assets are dumped. Not carefully, not gradually, all at once. The dollar index falls 15% in the first 30 minutes. Normally, the dollar moves less than 1% in an entire day. This isn't volatility. This is panic. Gold jumps from $2,000 to $3,500 an ounce. Bitcoin surges. Anything that isn't dollars suddenly feels safer than dollars. Hours 1 to 3. Europe wakes up. London. Frankfurt. Zurich. Chaos. European banks holding trillions in dollar assets start bleeding instantly. Trading desks freeze. Liquidity vanishes. A major European bank suspends trading. Swiss banks quietly introduce limits on dollar withdrawals. Then something even worse happens. The panic spreads beyond the dollar. U.S. stock futures collapse. The S&P 500 and NASDAQ are down nearly 20% before America even wakes up. Circuit breakers trigger. They don't stop fear. Hours 4 to 8. America wakes up. Morning on the East Coast. People check their phones, and suddenly everyone understands the same thing. This is real. The president appears on television. Remain calm. The situation is under control. But panic doesn't listen to speeches. People rush to banks. ATM lines stretch around buildings. Everyone wants cash, not to spend it, but because they're afraid it may soon be worthless. Here's the problem. Banks don't actually have your money. They operate on fractional reserves. Roughly 10% of deposits exist as cash. If even 20% of customers demand their money at once, the bank is finished. By mid-morning, ATMs are empty. Withdrawal limits appear. Arguments begin. Then fights. Hours 9 to 12. Wall Street tries to open. At 9:30 a.m. the New York Stock Exchange opens, or tries to. In the first minute, the S&P 500 drops 12%. Trading halts automatically. 15 minutes later, trading resumes. 5 minutes later, it drops another 10%. By noon, regulators close the markets entirely. They blame technical issues. It isn't true. They're trying to stop panic. Instead, they freeze money. The first night. Banks announce an indefinite closure. ATMs stop working. People still see money in their accounts, but they can't touch it. Stores are emptied. Some places stop accepting credit cards. Others demand cash only. But cash no longer exists. Prices jump by the hour. Gas goes from 3-ton fiver a $50-ton a gallon. Bread goes from 3-ton fiver a $50-ton a gallon. Bread goes from 3-ton talk. Not tomorrow. Today. By nightfall, the dollar has lost nearly half its value. Curfews are announced in major cities. America doesn't sleep. Neither does the world. The first week. Capital controls are announced. Money can't leave the country. Too late. Those who could move their wealth already did. Banks stay closed, then stay closed longer. The Federal Reserve announces trillions in new money. Each announcement makes the dollar weaker. Internationally, the unthinkable happens. Countries stop accepting dollars. Oil is priced in other currencies. Trade routes break. A system built over 80 years collapses in days. By the end of the week, society begins to fracture. Stores close not because goods are gone, but because prices change too fast to keep up. Barter returns. Food becomes power. Skills become currency. 1 month later, a new dollar is introduced. 100 old dollars become one new dollar. No one believes in it. Price controls follow. Shortages follow faster. Gold ownership is restricted. People hide it anyway. Society reshapes itself. Those with physical assets survive. Those with skills adapt. Those with only savings don't. So what's the point? This wouldn't be the end of the world. It would be the end of a world built on the dollar. History shows this pattern again and again. The question isn't if systems like this fail. The question is when. And when they do, money isn't what saves people. Skills do. Assets do. Community does. Life continues, just not the way it used to.